For this section, you will need to print the worksheet that was uploaded on the MyMorePark website for bank reconciliations. So please do that before proceeding with this recording. Okay, when we look at bank reconciliation, let's have a look at the process involved in reconciling the books of the business with the bank statement that we received from the bank. Step 1 is compare the closing balance in your general ledger bank account with the closing balance in your bank statement. If these are not the same, then continue with step 2. In other words, what we're saying is when you receive your statement from the bank and the bank's picture of what has happened in your business over the last month is not the same as what is shown in the books of the business as having happened in the last month, then those two things need to be reconciled. So we now need to go and look to see why are they different, where are they different, and what needs to be done to correct them. So step 2 is then to compare the previous month's bank reconciliation together with this month's cash journals with your bank statement. In other words, last month we also would have had items that were not the same between the books of the business and the bank's statement, and we would have drawn up a bank reconciliation statement. It is possible that some of those items still do not show on the bank statement or have not been corrected in my books yet. So I need to compare that first, and I also need to then look at this current month's cash journals and compare both of those with the bank statement that I received from the bank. And then what I want to do is to circle any item that does not appear in both sets of records. Step 3 would be to look at the items that appear on the bank statement, but that is not in our cash journals. That means that somewhere we have forgotten an entry into our general ledger bank account, and it has already been recorded by the bank, and we now need to record it in our books. So all that needs to happen there is that we have to enter it into our bank account. It does not go on the bank reconciliation statement. Step 4 is to look at items that appear in the previous month's bank recon statement and or this month's cash journals, but that is not reflecting on the bank statement. All of those entries must then again be entered on a new bank reconciliation statement for this month, because it simply means that we are showing things in our books that the bank is not yet reflected in their statement. Step 5 is to look at any errors that have been made in the cash journals. When we make an error in our books, then we have to correct it in our books, which means that we then have to correct it in our general ledger bank account. And step 6 is to look at any errors that the bank made. If the bank made errors, we obviously can't make changes on their bank statement. We have to then correct it on the bank reconciliation statement. We would inform the bank of the mistake, and then hopefully on the next statement it would then show the correction of that error. This is obviously much easier to explain by using an example, and for that purpose we've uploaded a worksheet for you to use in order to see an example of how this would be done. So if you have that next to you, you will see that some information was given to you. Charlie Pty Limited presents the following information. They give you the previous month's bank reconciliation. They also give you the cash payments and cash receipts journal, and they give you the bank statement. And then they say you are required to draft the bank reconciliation as of 31 August 2011 and assume that any errors are made by the bank. So let's follow the steps involved. Step 1. If I look at the closing balance in my cash journals, then I will see that it is 2,047 Rand. But if I look at the closing balance in my bank statement, then I will see that it's 8,875 Rand. It's not the same. And therefore I know that I need to continue with step 2 and do a reconciliation between my cash journals and the bank statement. Step 2 is to compare the previous bank reconciliation statement and my cash journals to the bank statement, and then to circle any item that is not appearing in both. And I will show this by highlighting the items on the next slide. I suggest that you pause the recording here and first do this for yourself. In other words, go and look at the bank reconciliation from the previous month. Tick off any items that now appear on the new bank statement and circle any items that does not appear on the bank statement. And then do the same with the cash payments and the cash receipts journal that was given. Tick off any items that you can find on the bank statement and circle any items that you cannot find on the bank statement. And once you've done that, continue watching this recording. Okay, so now we've had a look at what are the differences and what appears on the bank statement and what does not appear on the bank statement. And if you look at the previous month's bank reconciliation statement, you will see that there are two items that are still not reflected on the bank statement. And those were an outstanding check, number 60052 for 1,850 Rand. And the error that the bank made the previous time on a check of 270 Rand, what happened there was the correct amount was 2,360 Rand, and when the bank entered it into the statement, they actually entered it as 2,630 Rand. So there was a difference of 270 Rand, which was more than what it should have been, and that's why that amount is in brackets, because it actually has to be deducted. So those two items are still not reflecting on the new bank statement, and therefore they have to be shown again in the bank reconciliation for this month. So keep them to one side. If you managed to circle them, well done. If you haven't, please go back to see where you made your mistake. So those are two items that will then go into my new bank reconciliation. If I look at the cash journals, there's quite a few items that I cannot find on my bank statement. If I look at the checks that are not yet reflecting in the bank statement, there are 5 of them, and that is check 60061 for 3,000 Rand, check 60062 for 1,500 Rand, check 60064 for 1,998 Rand, check 60065 for 3,250 Rand, and check 60067 for 1,000 Rand. Those 5 checks have not been tendered for payment to the bank yet, and that's why the bank is not showing it on the bank statement yet, but we've already issued it. So those then need to go into my bank reconciliation statement so that I can show at the end of the month that I have already issued those checks, but they have not been through the bank for payment yet. On the debit side, the only receipt or deposit that is not showing yet is the one on the 31st, the last day of the month, which happens quite regularly, for 5,500 Rand. So because I had already shown in my books that I've received that money, but when I banked it, overnight it obviously fell into the next month, the bank does not show it yet on the 31st, because it would have only been gone through the books of the bank on that night of the 31st. In other words, it would only show on the 1st of the next month's bank statement. Okay, so those are the items on the cash journals that do not currently reflect on the bank statement, and those are the items then that need to go into my new bank reconciliation statement. Right, so that was step 2. Step 3, there is nothing involved here, because step 3 was items that appear on the bank statement but not in our cash journals. And if you look at your bank statement, you would have seen that you've ticked off all the items. So there was nothing on the bank statement that didn't show in our books, so we can skip that step. Step 4 is items that appear in the previous month's bank recon and in our journals, but not in the bank statement. So those are all the highlighted ones now that we need to put on the bank reconciliations on a new bank reconciliation statement. Now, there is a certain format that we need to follow when we do the bank reconciliation statement, and in summary, it looks something like this. So on the left-hand side, we start with the balance as per the bank statement. In this case, it was 8,875 Rand. And then it's useful to first deal with the matters that was outstanding from the previous month. In other words, from the previous bank reconciliation statement that is still not showing on the bank statement. In other words, the outstanding check and the error. 1,850 Rand and 270 Rand. Now, if you look at them, you will see that they are opposite to what they were, because remember, we're now working with the balance from the bank statement, and the bank statement is always opposite to what we have in our own books. And then we list the items, the new reconciling items that we have now seen in our cash book is not yet showing on the bank statement. Remembering again that we're seeing this from the perspective of the bank. So any money that must still be paid by the bank will be shown as a negative, in other words, in brackets, like the outstanding checks. All of the checks must still be paid, which means that the 8,875 Rand is actually more than what it should be, because in actual fact, these checks should have been paid already. And that's why we are deducting them. So any outstanding check gets deducted if you start with a balance as per your bank statement, because we're seeing it from the point of view of the bank, not from the point of view of the business. Remember, this is a bank reconciliation statement. Bank reconciliation meaning we're taking the balance that the bank is showing and we're reconciling it with our own books. So what needs to happen at the end of the day is we start with the balance from the bank statement, we make all of these amendments or reconciliations, and what we should end up with is the balance that shows in our own cash journals. Okay, so in this case, we then list all of the outstanding checks, 3,000 Rand, 1,500 Rand, 1,998 Rand, 3,250 Rand, and 1,000 Rand. Those are all the outstanding checks that I had highlighted on my cash journals page, and you have that with you as well. And then there was one deposit that we had not seen on the bank statement yet, and obviously that must be added, because remember now, again, from the bank's point of view, that is a deposit that we received due to sales that we had, and therefore our account with the bank should have increased with that amount. So we have to add it to the balance that the bank has for us. What happens now is if you add and subtract all of those items, you should get to a total of 2,047, which is the balance that our cash journal showed us. If you don't, in other words, if you take 8,875, you subtract the 1,850, you add the 270, you subtract all of those outstanding checks, and you add the 5,500 of the deposit that doesn't show yet. If you do all of that and you don't get to 2,047, then you made a mistake somewhere in your reconciling items. The suggestion would then be to go back to make sure that you're adding and subtracting the correct stuff. And if it still doesn't work, then go and look at your ticks that you made, the items that you circled. You might have missed out on something. But a lot of times what happens is that you add or subtract the wrong thing. So always remember that we are reconciling the bank's balance with our balance from in our books. So we start with a balance from the bank statement, and we then reconcile anything that we have in our books that's not on the bank statement, and the result we get in the end should be the balance that we have in our books. Okay, so anything that still needs to be paid, any outstanding checks will be deducted from the bank balance that as per the bank statement, and any deposits that we've had that doesn't show on the bank statement yet should be added, because those are amounts that should be paid into our bank account. Okay, if we then continue step 5, then we'll see that there's nothing to be done there, because step 5 said any errors that have been made in the cash journals, and there is no errors that were made in the cash journals here. In other words, there was no amounts that were entered incorrectly, for example. And step 6 the same. Step 6 said any errors made by the bank must be corrected on the bank reconciliation statement, but there weren't any new errors. We only had the one from the previous month, and we've already shown that in the bank reconciliation statement as having been carried over from the previous month's bank reconciliation. So there's no any new errors made by the bank. Again, typically an error would be an amount that gets done incorrectly, or maybe a check or a deposit that was meant for somebody else finding their way into our account. But then you would get that information separately, and it will be told to you that it was a mistake made by the bank. Okay, that's it then for bank reconciliation.